Okay. Small mic test. Can you guys hear me? Quick mic test. Okay. Good afternoon, everyone. It's good to have all of you here, and we're looking at the order flow of the Nifty. I hope everyone's had a good trading session today, and it's been a slow kind of a market, but I hope everyone has been able to capitalize and make the most out of the day today. Right. So we are in here today to talk about what actually has happened through the week, and we will push out some pointers as to how we can set the agenda and make plans for the coming week. You can come in with your questions, and we'll be happy to answer them. My colleague Uttam is going to be here, as is Suyog, and they would answer all those questions. So keep the questions coming in. Now, as we begin, I just want to start off with a small disclaimer, because we are talking FNO markets over here, and I'll just read the disclaimer to you really quick. Trading in the futures and options market, the FNO market at the National Stock Exchange, involves substantial risk and may not be suitable for every trader. Past performance is not an indication of any future results. The high degree of leverage can work against you as well as for you. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial trading capital, and therefore you should not trade with money which you cannot afford to lose. You should be aware of all the risks associated with FNO trading and seek advice from an independent financial advisor if you have any doubts. The opinions and information presented in this program today are for informational purposes only and are not intended as an offer or solicitation for the purchase or sale of any financial instrument. All opinions and information contained today are subject to change without notice. Neither WeTrender nor its associates can guarantee any accuracy or completeness of all or any of the information provided in the next 1 hour and a half. Right. So that was a standard disclaimer needed, as we start off, because we are live trading, and we're looking at a live chart of the order flow today. Right. So this is a order flow of the Nifty. As you can make out, the last few bars have been together, and the market has been quite in a range and working up into a pattern over here, consolidating over here. So it's about 254, and we'll talk about this market as we go along. But it makes sense over here that this is working out into a small range, and as a directional trader, when you see this market doing this, working out a range like this, you need to be careful, because this is not a system which is gonna give you a lot of results, right? So it is not meant for directional bias. You can make out that the past half an hour and more has been in a sideways 15-point zone in the Nifty, and the bank Nifty also has been just consolidating in a smaller range. So this is not the kind of environment to push out a directional trade. Right now, let's review about what has happened through the week which is gone by. So I first want to bring up a market profile chart. And we'll just walk through what has happened, because what has happened is very, very important to understand, because it can lay the groundwork of what can happen next, right? So you have to understand information from the point of view of what we call context, or simply put, it is us understanding the market from where it has been previously and making an adjustment as to what it can do currently, right? So this is a yearly profile on your screens, and just ignore, okay, this profile, it's developing up on the right over here, but this is where we are, okay, in 2023, as we are into the last few months of the year. This is where we are, okay. So we are at a high which we've not seen these past few years. Last 2 years, okay, we just came in up to about 18. This is the Nifty futures. Let me just pull up the spot. And I go back to the yearly profile. So we are consolidating at a very high level, and the market, okay, is doing extremely good as it moves, okay, in this range and working up these higher values. We are working into areas and reaching places where the market has not been there before. So this tells you that between the buyer and the seller, the buyer is doing a very good job of trading this market now at all-time highs, right? Now, this yearly profile is not going to help you and me as traders to make independent decisions about what to do next, but the better information about what is happening is visible in a monthly profile. So if I go down, okay, and look at what is transpired through the month, and again, when you're looking at this month, you're looking at this month of September versus, okay, what has happened previously. So this is all of August over here. So all of August, okay, was all this particular box of trade, right? This is what happened all through August. And as you can make out, okay, this is where we are trading right now in September. So we are trading well above this value. The black zones over here are the values of the last 2 months, and we are trading well above those values, which indicates to us that the buyers are in control. So it is obvious anyway, because, okay, prices are anyway higher, but just context wise, we are trading well above the value of the past 2 months. So it tells us again, okay, that the buyers are in control of this market and they are driving the auction over here. So anybody who comes in over here and just buys a put without any basis, without any background, is guaranteed, okay, to lose money, right? You may have, okay, an imaginary thought in your head that this is a response, this is a resistance zone, or this is an objective, and you're buying, okay, long puts over here, okay, you're losing money to the market, and you're joining, okay, that league of about 90% of the gentlemen who lose money, because, okay, you're working on imaginary ideas. So first and foremost, okay, the context wise, okay, the buyers are in control, and it makes sense, okay, to be long in the market when the buyers are driving the auction up higher. Let's zoom down a bit more, and if you come down, okay, to the weekly time frame, and we look at, okay, what has happened in the weekly. So now, okay, this is this week of trade, and today is the Friday. This is the profile of Friday, and you can make out, okay, even today, okay, the market is reaching an all-time high. So again, it is telling you, okay, that the buyers are in control of this tape, and it makes sense, okay, to be a long futures trader or a call buyer at these levels, right? You don't need to run ahead, okay, and just drop, okay, your intelligence in this market and think, okay, that so and so road, okay, is gonna be a road, okay, to resistance, etc., or work with an imaginary level, okay, which, okay, many people say is resistance. The market is flowing in a particular direction. It's got energy in that direction. Continue to work, okay, in that direction only. Okay, let's just focus, okay, on where we are in terms of this structure of the day. And this is still a market profile chart. As you can see, okay, that the market opened around here. This was the A and B period, the initial, and this is the resistance zone of yesterday. And from here, okay, the market, okay, didn't really, okay, make a lot of attempt to go higher at the open. But today we are seeing, okay, this market, okay, move up above the highs of the first 1 hour, and it's currently at this level of about 2265. So we had that belief, okay, that this market, okay, would move to about 2324 to complete, okay, this round of the buying, okay, which was there. There's about half an hour, okay, still in the day, but most probably by about Monday, this objective, okay, of the buying is there, okay, still, okay, to hit a maturity target of 2324 on this option. So continue, okay, to stay, okay, with a positive bias, and there are multiple reasons, okay, to stay positive over here. One is because, okay, we are currently above the initial balance high, which is this yellow zone. The IB high over here is 2173. The low is about 2130. So that itself, okay, will tell you, okay, that this market, okay, is now, okay, moving higher. We are staying, okay, well above the higher. Now this is the Nifty spot I'm talking about, and it continues, okay, to work its way upwards, right? So the initial balance has been taken out. The buyer is in control. There is no reason, okay, for you, okay, to not trust this market, okay, as a buyer, and it makes sense to continue being a buyer in this market. This is the Nifty, right? Now, what about what can happen in the week? So to understand, okay, what can happen tomorrow or in the week, okay, to come, which is from Monday, we have a holiday shortened week up next. We are at Monday, and Tuesday is gonna be a holiday. So most probably, okay, I'll pull back, okay, the futures chart of the Nifty. And we've just made a new high of 20268. This is the Nifty futures. The extension is good, right? And I believe, okay, this is still got about 60 or 70 points, okay, to go to up to about 2324 level. The time is, okay, less, okay, to get in that 60-point move, but sometime, okay, because, okay, the buyer is in control, we should see that level up higher, still, okay, sustaining in the Nifty. If they continue to add initiative buyers, then, okay, we can look at further upsides. But what I'm trying to emphasize over here is simply, okay, a single point, that the bias is on the long side. And as a trader, you need to appreciate and understand that. The stupidest thing, okay, which you can do is draw up an imaginary level over here or here or here and say that is a resistance and buy puts in the market, because the market is not giving you any evidence right now that this is a short, right? Now, a lot of you are working with concepts called overbought and oversold, and they've been, okay, very helpful, okay, to some smart traders. But on the whole, they are concepts, okay, which have resulted in a lot of traders losing money also. So understand, okay, one thing, okay, about the markets: there is nothing called an overbought, and there's nothing called an oversold. In big trending markets, okay, what goes high continues to go higher, and in big trending markets, what goes lower continues to go lower. Okay, there is no limit actually. Okay, when it comes to downtrending market, the limit is established at 0. But I've been, okay, part of a market, the oil futures market, which went negative also. Now that's a very, very rare event, but it can continue, okay, going down, okay, to 0. And on the upper side, okay, there's no upper limit to what it can go. So these concepts of overbought and oversold, they are extremely good if you're a smart agile trader and understand, okay, your time frame, which is if you're trading the daily and you know, okay, that this level, okay, will be the limit of this market, fine, for that particular one day. But don't, okay, go and believe all those kind of concepts, because a lot of people, okay, have lost a lot of money working on those kind of concepts also. So you may think, okay, that this market is overbought over here and think about buying puts, etc. That's not the way, okay, you should approach the market. Go with the flow. The biggest money is always made in a market, okay, in which you move, okay, with the flow. You're identifying the flow of the market, you're identifying who is in control, and you're making profits alongside it, right? So this is, okay, where the upside is. Okay, we'll review if we go above 23.25 and we can have, okay, more actionable levels. These are not, okay, hard lines, okay, put up on a rock, okay, which mean, okay, do not cross or everything is over at these particular levels. We are just looking at these points as indicators about where to assess the market in terms of demand and supply. So when I say 23.25, I'm not saying, okay, that this is a ceiling to the market. I'm just saying at 23.25, when we do get over there, we will review the market, okay, to see if it wants to add extra demand or extra supply over there. Now, one question, okay, which a lot of traders had when we looked at this chart of the market profile. Remember earlier last Friday, the market, okay, was drifting. It was in a sideways bias, and early in on last Friday exactly, okay, at this point, the market, okay, put in a failed auction. This was that zone, okay, where the market, okay, put in that failed auction that day. Right over here around 19,772 levels. Now, what really happens, okay, with the failed auction theory is that markets tend to go back to that level in T+5. So that's that trading day, which was Friday, and 5 trading days after that, that's T+5. So technically, okay, that T+5 is happened today. So that's Monday, Tuesday, Wednesday, Thursday, and today is a Friday. And we have not seen the market go to 19,772 again. So what's happened actually over here, right? So the failed auction theory says that the revisit is done of that zone, provided the seller shows, okay, that he is no longer failing, right? Now, to understand, okay, this very, very clearly, you have to understand, okay, what really happened over here and what is a failed auction. So a failed auction, if I zoom in over here, is you see the C's over here. So if you come back over here with me, and if you see the C over here, this particular one, this is the time the seller last attempted, okay, to push an extension lower at 19,772 levels, and he failed. The market, okay, went back into the initial balance, and you need to read out above the FA over here. But FA says, okay, that the market, okay, fails to go on below the IBL, and it crossed above IBH, thus confirming the FA. So this was an attempt to go lower. It failed. That's why it's called a failed auction, and the market, okay, went higher from here. Now, subsequently, for us, okay, to think about a test, we have to see more attempts, okay, where the market, okay, tried to go lower. So we were looking, okay, to see if the market, okay, was putting up and failed auction, putting up an effort to go lower on Monday. So this happened on Monday. On Friday, the market, okay, closed higher. This is the K period, the 215 to 245 period, and we closed, okay, somewhere around here. Okay, the next day the market, okay, drove higher. This is a small buying tail, which again tells you that the buyer was strong, and this market again the next day closed higher. LMN over here, the market closed. The day after that, that is a Tuesday, again, okay, you can see a small responsive buying tail over here, and the market continued higher. In the B period, there was a small selling over here in the A period on Tuesday, but no extension was made. A small responsive buying pattern is there in the B period, and the market continued higher. The day after that, on the 13th, you can again see that the market, okay, put in an extension higher. Now, yesterday was the first day in 4 days where the market put in an extension and tried to negate all the buying which was coming the previous day. But even this particular extension lower, this is a good extension lower below the IB. Yesterday was the first day where the market attempted an extension lower, but the seller was taken out by the close and the market finished higher. So this is again a move by the seller which was nullified. The market closed back into the initial balance. Now here today we are not seeing any move below IBL again. So what does this tell you about the strength of the seller? So the seller who failed last Friday is no longer strong or not strong to drive the markets higher. So remember, in market profile, what we say is that the person who pushes an extension, a person who manages an extension is the one who is stronger. So today I was just speaking to you about the IBs, the IBH being taken out by buyers, and the buyers are pushing the extension. So we can say the buyer is stronger. That Friday we got an FA because the seller pushed in an extension and he failed to push an extension lower. So the buyers took control and pushed the higher yesterday. So when I say there is a revisit possibility, the first thing I look for is the evidence of an extension sustaining. Now yesterday there was some idea that the seller wanted to push lower, but it did not sustain till into the close. So you can say that the seller again was found to be weak, and that's why we're getting another open higher. I'm not going to be looking for that FA revisit till I see a seller extending lower in those T+5 days. So I hope that clears the air on how you should be approaching a failed auction. The seller has failed, and you need to see evidence that the seller is regaining strength. Until that extension happens, until you see that the seller is coming back into the market in a big way, you are not going to be looking for that FA revisit. So just as a concept, you need to be aware of that. Back to an order flow chart, and let's understand what we are doing over here. So it's about 3:15 p.m. and as we are probing higher, there is a little bit of a profit booking which is coming into the market. So there is an initiative selling tail which went lower from about 2260, but it got some response around 2210 zones. Some booking happened. So these are just locals trading with a few pieces up and down here and there. So there is still a little bit of supply coming up over here. On the whole, you can see that there is efforts being made to buy, and some supply coming in at the highs which you can see over here, right? The speedo is pointing at about 72, which is not really a great volume day, and it is telling you that you like to look for trending moves when this is around 100, 150, more than 120, and then you can be assured of a good directional bias in the market. But whenever we see this speedo at about 65, 70, 75, it tells us that the big players are not trading that day, and it tells us to be a little bit more careful as to how we approach the market that day. On the whole, when we see a speedo reading of about 70, 72, we are not looking for those big booming 150, 200, 250 point days in the market. Those 250 point days are kind of rare nowadays, but even that 150, 200 point move is not there when the volume is less than 100, 120, right? So now this is relative volume, and it compares one day with the next and the past few days also. But even then, this is not an environment to be looking for those strong directional moves, which is why the market has been in a range all day, and it is a market which we say in market profile as dominated by locals or traders who are trading range bound moves. Now one thing you have to appreciate about the market It's no longer a market which gives you those, in intraday or in a day from 9:15 to 3:30. It's no longer a market which gives you 300 or 200, 250 points one way, one side. Right? On this market is dominated, okay, by a lot of traders who trade short with a big size and they trade quick, right? So they trade, again, let me repeat, they trade short, they trade with a big size, and they trade quick. Now, when I say short, it does not mean, okay, that they are shorting the market. I'm just saying, okay, they are choosing a smaller time frame, and the way, okay, they are making, okay, their money is by going in, okay, with a large size. So suppose, for instance, okay, just to clarify this, you are a trader, okay, who likes to trade about 100 points in the Nifty every day, and you trade it with about 2 lots. So you get about 200 points from the Nifty out of those 2 lots. But if there is another big trader alongside you and he trades the same 100 points with about 200 lots, guess who makes the more money? Guess who makes the bigger money? Right? It's the trader, okay, who's trading the bigger size. So we have a saying here that as a trader, you need to go, okay, from lower to higher. Okay, so the grail, the holy grail, okay, for all of us as traders is to, okay, progress, okay, from 2 lots to 4 lots to about 10 lots to about 20 lots, okay, and even more, and get the confidence, okay, to trade bigger size, because that is the true holy grail of trading the markets, right? So this is overall order flow today. Nothing big in terms of what is a tell for tomorrow, but again, okay, the seller, okay, is getting arrested at the lows, and not much, okay, developing lower. The bank Nifty, from an order flow point of view, okay, there was, okay, a little bit of selling, okay, which came in earlier in the bank Nifty, but most of that has been negated, and there are good attempts, okay, to buy the market lower. So down over here, you can see, okay, all these buyers, okay, have come in into the lower prices. There is a trifecta over here. So even though, okay, there was a seller over here and trifecta of sellers, okay, they've not been able to do much. The buyers are coming in at every single decline and holding up price and holding up and driving the market higher. So overall, okay, the bank Nifty, okay, was good, okay, to test, okay, that 46,500 zone, and it should be, okay, doing that like the Nifty on Monday. Not much, okay, has happened today, but overall, okay, the bias can be carried forward for Monday at least. Seasonality wise, many of you, okay, who've been trading for a longer period of time would know that this is what we call the Bappa rally. It just comes in, okay, a few days, okay, before the Ganesh Chaturthi, which is a very big event down here, okay, in Mumbai, Pune, Maharashtra. It's a massive event, and there is, the sentiment wise, okay, there is a lot of positivity ahead of that event. So if you just drop, okay, all your calendars and look at, okay, what has happened historically before the Bappa day, it's always been positive, and it's always a good time, okay, to adopt a long posture in the market and a long bias. So we've done that, and we are now, okay, on that period, okay, where we are there. But be a little bit watchful by about Wednesday or Thursday. We've run up a lot, and I'll expect, okay, some kind of a pullback to come in from Wednesday, Thursday, Friday onwards. Post that holiday, you need to, okay, just make a small adjustment to the existing bias of the market, because it's never a one-way street. Now we've run up, okay, for what, about 15 days in a row now. 15th of September today. The last 10 days of the month, okay, generally when that happens, you need to be careful, because some kind of a profit booking is expected. So how will you know, okay, that there is a profit booking coming in? You see these IB bars, you'll see a lot of them in the 30-minute candle. If there is a profit booking coming in, you'll see a lot more of these initiative sellers. That means, okay, lower down, the demand, okay, is not going to be there to arrest the market. So you'll see a string of pinks and reds, okay, coming up, and that will translate into a lot of initiative selling bars. Right. Let's look at, okay, what the week is talking to us in terms of the settlement, okay, which is coming in for the Nifty next Thursday. I'll begin with the Nifty and then we'll look at the Bank Nifty and the Fin Nifty also. So we began a new series in the Nifty today. And this is the new settlement. The market, okay, is very keen at about 2200 right now, and this is an invitation to writers. We spoke about it earlier in the morning also, and I said it's an open auction out of range. So it is always an invitation for writers to come in and write, okay, over here. So at the moment it's 2300 on the higher side and 2100 on the lower side, with gamma centered at 2200. That is what the market is looking at now. Just to understand, okay, why we need to look at this is before that, let me just pick up, okay, the option inventory of the market. So this is the Nifty. So this is where we are, okay, centered mostly at about 2200. And if you look at where the volume came in today, the bulk of the volume today, this is the volume. It's a little bit different, okay, from open interest. Open interest is the number of positions which are open. Volume is the volume which got traded, where the traders are seeing the maximum. So it's not surprising at all that it is coming at the money, and it's coming at 2200. So this is the zone to be watching into next week as well. What happens around this 20,200 level. So this is, okay, where the positions have been built up for the coming week, and they will continue to build, I think, because there is a holiday again, okay, on a Tuesday. So at least, okay, for the settlement of Thursday, this, okay, would be a hedged position which is coming up. It's only about 70,000 and 96,000 contracts now, okay, but this should, okay, pick up pace by about Monday, and by Wednesday, Thursday, okay, there'll be a lot of writing happening if the market, okay, consolidates in this zone. This is the Nifty. This is the position of other traders in the market. So what we do is we have a saying over here that you look at the market and you understand, okay, the structure of the market, and you understand it in terms of, okay, where your position is placed with that structure of the market intact. But you also need to understand where the rest of the market is trading and what is the inventory of the other traders in the market. And the best possible way to understand all the positioning of the other people is by having a look at the open interest of other participants. This tells you very simply, okay, what is the positions, okay, which are being carried forward by other traders. Open interest, my people, okay, is just the open positions of traders in the market. And this is such a powerful tool that it gives you, okay, in one glance, okay, what exactly, okay, is being carried forward to the next day. So typically today you'll see a lot of open interest building up because it's the first day of a series in the Nifty. So you'll see a lot of green coming in. So a lot of traders are carrying home positions, okay, today. Okay, let's look at the Bank Nifty. I'll start off, okay, with a spectrum chart. So the Bank Nifty is doing that weekly settlement now on Wednesday. So 46,000, 46,400. So I still feel, okay, there is a little bit of upside left in both the Nifty and the Bank Nifty. So we'll see, okay, how it pans out through Monday, and then, okay, Wednesday onwards, okay, we can, okay, have a look at a dual auction, or maybe, okay, some profit booking to come in the Bank Nifty. The Fin Nifty, 2700, 2400, with the gamma building up at 2500. So there is a buyer, okay, who's been in control all day, and we've pushed an extension, and there is a little bit of a responsive selling coming up over here, which we'll have to be watchful for as we move into. This is the spot, of course, and if we move into 2600 later on Monday, we need to keep an eye out, okay, for evidence of responsive selling in the Fin Nifty lower. But most probably, okay, it should, okay, remain stable around 2500. That is the Fin Nifty I'm speaking for at the moment, and this is, okay, where the profile has been consolidating. This thing today this is Fin Nifty, but it's coming out of this beautiful, okay, Gaussian curve, and 2380 should get protected over on Monday, right? So that's the Fin Nifty settlement. It will be the one to watch out for, and we'll have to, okay, look at the positions of other traders, because it gives you a window or gives you an idea about how they are placed, but it also tells you, okay, about, or also alerts you on the kind of opportunities, okay, which can come for you as you move higher. So all that the open interest, okay, in Fin Nifty, okay, was reducing on that move higher, but at about 2500, okay, there is a build up, and all these positions are getting carried forward home, right? So just to sum up, this is the Nifty futures as we close. A little bit of profit booking is not really major supply, because we are not seeing a lot of initiative selling over here. A little bit of profit booking is coming in, which is understandable, because we are having a we've had a big rise, and it's a weekend coming up and some holidays next week, so some traders, okay, are taking profits. But I still feel, okay, there is a little bit more, okay, to do on Monday on the upsides. Same thing for the Bank Nifty as well, and you can, okay, keep an eye out, okay, to see if we can get that demand higher. Anything, okay, below 2180, we'll be looking for some signs of selling to come in, and if it does, okay, we can, okay, review it when it does. So overall, guys, there is okay, just a little bit of effort required if you need to trade the markets well and good. The markets are not for people who come in with a casual approach and just trade all over the chart. These numbers, okay, which you can see on screen right now, this is all in lots, and these are mostly seasoned traders. Like, this is about 455 lots coming over here, right? And these are all seasoned traders who know what they are doing, who know, okay, what they should be doing and how they should be moving the markets, and they have a strategy, they have a plan, they have a reason to put that money into trading. And then, okay, you contrast that, okay, against a person who just enters and puts in, even if it's about 2 lots or 4 lots, but with no plan, no agenda, no training, no idea about, okay, what the market has done or what it can do. And then, okay, you get those kind of stats, okay, from the market, which says that 90% of traders will lose money, right? So 90% traders, okay, will lose money, because, okay, you are going up against traders who are extremely smart, who are extremely good, who have a plan, and they have massive resources to back them up. So you cannot beat them all the time, but at least you can try to be as good as them or trade as well as them. And it's an open market, everybody knows, okay, the entire thing about how it works, but you need to put in the effort to understand how to go about it, right? So don't be casual, okay, be a little bit more serious, okay, about what you're doing, because, okay, you're trading alongside big money, and whether you like it or not, okay, that is competition for you, and you have to be aware about how they are trading and what they are doing, okay, for you, okay, to get the money, okay, out of the market, for you to be able to monetize the information from the market. So work at it, okay. It's a similar opportunity for everyone, whether you're a retail, whether you're a pro, it's the same markets, okay, for everyone. The one who's able to monetize information better is the one who generates profits, right? So I leave you with that. So this is, okay, what we wanted to speak to you about: understanding structure, understanding the position of other traders in the markets, and understanding, okay, how best, okay, you can execute, okay, with your trading strategies, etc. It's 3:30. We are closed, okay, for the day. 2240, 46,255 in the Bank Nifty. I want to thank you, okay, for joining up, okay, with us in the session. And if you have any more questions, okay, you can, okay, shoot them to us. Thank you, guys.